All right, so all eyes on three things this week. I just talked about the new Bing. It is killing it. The skies, everyone's looking up. UFOs everywhere, all maybe from China or outer space. And, of course, the CPI tomorrow. Now, if there's anyone who can sort of knit all of this together, it's my next guest. Joining me now, Bianco Research President Jim Bianco. Jim, I got to start with the UFOs, my man. I mean, it's the kind of thing that I know at some point I'm going to see Jim Bianco find a chart about, UFOs in the past and the sightings and how many were shot down and what the market did. I'm just waiting. I mean, I know you're working on the data. I can't find it. I know you will.
Yeah, I'm looking forward too, but it's hard to find data on the Borg Collective and how many UFOs they've sent to us. So hopefully I'll be able to sort it out.
What do you make of this? It's an amazing story. I mean, I think the balloon thing was really intriguing in the sense that it was able to sonder over our nation for a week, take a lot of critical information, send it back to China. I'm not sure about these other options they're shooting out of the sky, but the market seems to be ignoring it for now.
Yeah, because I don't think it sees any real threat to any of this stuff. We don't know what they are. I mean, my fear is that what we're doing is overreacting and shooting down a bunch of weather balloons. And while it doesn't create any harm to anything, it's just very embarrassing. So they're kind of clouding it in this story. But, if it turns out to be something more significant, that these are Chinese balloons and that there's going to be a retaliation, then I think there could be a market reaction.
Yeah, I don't like the way the administration seems to be apologizing to China and covering for them throughout this whole thing. That's a little bewildering. Let's move to the markets and the economy, Jim. All of a sudden, it feels like everyone's kind of whistling past the graveyard. Check this out. So concerns, these are like Google searches, right? So for inflation, they've come down pretty nicely. Recession, they've come down sharply. And stagflation has gone almost to zero. Are we getting just a little bit too sanguine here?
Well, I know why it's happening, because the two things that consumers care the most about, falling gas prices and rising stocks, has got them exhaling and breathing a sigh of relief. There is some justification to that, because a lot of the labor data is not showing any signs of falling apart yet. We're still producing a lot of jobs. We still have relatively low initial claims. We still have a high number of open jobs, according to the job opening labor turnover report. So the labor market, as of now, still looks to be okay. Now, maybe that changes in the next several months, but I think most consumers are looking at the labor market, looking at higher stock prices, looking at lower gas prices, and feeling pretty good about things right now.
Right, but conversely, then that's not necessarily good for the markets vis-a-vis the Fed. So we got the CPI tomorrow. I want to ask you about the rule of 20. Folks, what this essentially is that you take the PE ratio and the CPI. If it's below 20, that's bullish. Right now, you can see where it is. I mean, no matter what it comes in tomorrow, it won't be below 20. And this just is sort of another way of saying that stocks are expensive. Now, you've been in this camp. Are you still there?
Yes, I am. And I think that this is the problem. And this is why good data on the economy, while good for the labor market, I don't want to see anybody lose their job, may not be the best thing in the world for the stock market, because what the stock market wants is the Fed to pivot and cut rates. So if the Fed doesn't pivot because the economy's okay, you might think, well, that's good for stocks. Only if you were paying a reasonable valuation for them. And you're not. You're paying above average. I don't want to say it's overvalued, but you're paying a full to above average valuation. So if the Fed finds reason, with the data being okay, to not cut rates, I think there would be more widespread disappointment in the stock market than, excitement that we're not going to have a recession.
Right. All right, Jim. Always appreciate you, really. And I'll be on the lookout for that UFO stuff. I know you'll find it. Talk to you again soon, my friend.
Thank you.
All righty. All right.